1031 exchange investment options. Sold your investment property and want to defer capital gains tax? I'll show you the smartest 1031 investment options. This way you don't leave money on the table. Not sure what you can reinvest into after you've sold your investment property? Check out this video and we're going to evaluate the different types of rental properties to invest into and which one is going to meet your real estate goals. If you've heard about 1031 exchanges and you're thinking you want to do one but you're not sure how, well, stick around. I'll break down where you can invest in real estate without having to trigger paying capital gains tax. By the end of this video, you'll know all the options to invest your 1031 proceeds into without triggering tax to be paid and meeting your strategy of compounding your wealth tax deferred as a real estate investor. So most important point about investing with a 1031 exchange is it must be like-kind property. So that means business purposes or rental purposes for another property that is for rental or business purposes. So essentially one investment to another investment. So that means real estate for real estate. Now what it doesn't mean is single family for single family or commercial for commercial or land for land. You don't need to match the property types. So what are eligible properties for 1031 exchanges? Well, any rental property really. So on the residential or housing side, you have single family homes, you have short-term rentals, you have duplexes, fourplexes, triplexes, you have large apartment complexes, mobile home parks. Any rental property that's geared towards housing is qualified for 1031 exchange investments. Commercial properties, you have office buildings, retail properties, which is grocery anchored retail or small strip centers. You have large industrial warehousing or flex or small bay industrial warehousing. I've been buying that recently and I love that as an asset class. Specialty asset classes. You have mobile home parks and self-storage facilities. You have car washes. You have data centers. You have mixed-use properties, which is residential mixed with either office or retail. And what are some of the passive options? Delaware Statutory Trust, DSTs, tenant in common real estate, and triple net real estate. All of these types of assets are geared towards rental or investment purposes. So what is a DST? Well, it's a Delaware Statutory Trust, and it's the only trust or entity structure that qualifies for exchanging from rental property into an actual trust. You're not buying real estate, you're buying a share of the trust that owns the real estate. This is a hands-off approach and typically is institutional quality real estate, where real estate investment companies will bundle institutional grade assets like offices, retail, industrial into an entity, and then you buy in to the DST that owns that entity, and you own units within that trust. These are fully 1031 compliant, and they're ideal for retiring landlords that don't want to go find another property to reinvest in, out-of-state investors who don't want to deal with the management of the properties anymore, and investors looking for purely passive income that they can park their money in. It's a smaller yield in these type of assets, but it's completely hands-off. The next is tenant in common real estate, and this is called a TIC. This is a flexible option of owning real estate, and it's where co-owners can own one property. So multiple investors can own a fraction or piece of the property by owning a portion of the deed. So multiple people would be on the deed or ownership structure where you're still an owner of the property and it's not a technical partnership. This vehicle is good for estate planning. It's good for co-investing with other partners, but yet each partner still has the ability to 1031 exchange. It's good for family transfers where a owner owns real estate and wants to transfer interests to all of the kids within that property. And also there's a structure called a drop and swap where a real estate partnership can convert the LLC ownership interest into a TIC. And then each owner now owns a portion of the deed in the TIC interest. And then from that point, they can exchange out into a real estate fund or a real estate partnership. After each ownership interest is in the TIC, now that partnership can reinvest into a 1031 themselves. The benefit to that is in a typical real estate partnership, unless each partner agrees to do the 1031 exchange, you cannot 1031 exchange out of the partnership into a piece of real estate because it's not like kind. You own a ownership interest unit in the LLC, not the actual real estate. So the TIC unlocks the ability for the partners to then individually 1031 exchange out of that property into their own individual properties and still allow the flexibility for some of the partners to cash out when they sell that property. Next is triple net lease investments. I have a Dunkin' Donuts and Pizza Hut in New Hampshire, and they're triple net, meaning that there is a long-term lease on the property and the tenant pays the taxes, insurance, management, maintenance, all of the expenses plus a base rent. On the Pizza Hut I own, it's a building lease. I own the building, they pay all the expenses, and then at the end of the life of the lease, they can decide to leave or renew their lease for another 5 or 10 years. They even maintain the building in that structure. And then on the Dunkin' Donuts lease that I have, it's a ground lease. So they actually built the property. They built the building on top of the land. I just leased the land. And then at the end of the 20 years, after their lease is over with, they can decide to abandon the building, tear the building down, build another one, or re-lease the building for another 20 years. And I have very little expenses on that property as well because I'm just leasing the land. But why I bring this up is because triple net properties are hands-off, but the risk involved is that if the tenant doesn't renew the lease, it's very difficult to lease these properties to another user because typical triple nets are highly individualistic to that tenant. So a Cheesecake Factory building is going to be very geared towards operating a Cheesecake Factory restaurant. When you need to release that property, if Cheesecake Factory leaves, there's going to be a high turnover cost. The costs are going to be leasing commissions to find the tenant, the cost to hold the building and paying the loan on the building while no one's paying rent. And then most importantly, the tenant improvements, the TIs. The build outs for the new tenant are going to be significant. Now, if it's a prime piece of real estate in a very desirable location, then a tenant most likely will pay a lot of those costs. But if it's a subprime location or not in a premier spot, then you are going to have heavy turnover costs. And that is the risk when investing in 1031 triple net properties. So how to choose the right 1031 exchange investment. I'm going to lay out a list on this chart, and this will help identify what types of properties you will want to buy based on your goal. Max cash flow. Well, your best options are going to be triple net leases, multifamily, mobile home parks, self-storage, small bay flex industrial. Long-term appreciation, land or value-add commercial real estate. Next, passive income. It's DSTs, tenant in commons, triple net properties, portfolio consolidation, medical office, large long-term tenants that are in desirable locations. And then lastly, retire from active management. This would be a tenant in common, DST, or triple net structure. This is mailbox money and very passive. So now you have an idea of the 1031 investment options. In this next video, I want to share a strategy with you about 1031 exchanging into an investment fund. This is a complicated strategy, but if you know how it works, you can find another investment opportunity that isn't typical, but yet can yield large returns, good tax benefits, and long-term appreciation and cash flow. So check out this next video about 1031 exchanging into real estate funds.